Hello and welcome to this podcast episode of G-Talk Ask the Expert. GLP is a leading global investment manager and business builder in logistics, real estate, infrastructure, finance and related technologies, and in Europe claims over 30 years of experience in logistics real estate, operating in 12 countries with over 4.5 million square metres of logistics space and another 3.4 million square metres awaiting development. They have over 10 billion euros worth of assets under management across Europe. Our guests today are all experts in the topic as they are all actively involved in GLP Europe's Fund Management. Welcome please Daan van der Hoven, Managing Director.
Hello.
Sylvia Slaughter joining us on the line from Amsterdam.
Hello.
And she's a Senior Vice President. Hello. And Kieran, also a Senior Vice President and Head of Fund Management in Europe.
Hello, Paul.
Welcome. Well, perhaps we could start by hearing a little bit about what you do at GLP and how you got there. I'll start with you, Daan.
Thank you. So I'm Managing Director for GLP in Europe. And in this role, I have overall leadership responsibility for GLP's European business. I actually joined GLP in 2018, approximately 6 months after their market entry in Europe. So I'm approaching 4 years with this company, which actually feels like yesterday. At first, I joined to set up the fund management business, but subsequently took responsibility of overseeing our capital deployment initiatives for our entire European business. And today, I've evolved into a more general management function, still focusing on growing our business further, but as efficient as possible.
So you've had the expertise in fund management was what came first, and now you've moved into the general management side.
That's correct. So prior to GLP, I've actually been active in the logistics space for over a decade, effectively the vast majority of my working career. And I've had responsibilities in the full spectrum of the logistics real estate business, from asset management to portfolio management and later on transactions. It's fair to say, though, that I do feel that the sector has never been as excited as it is today.
Well, we'll come on to that in a minute, I hope. But Sylvia, the same question to you about what you do for GLP.
Sure. I joined a few months after Daan. I was the second hire into the fund management team. So this is back in 2018. And I was brought on to help Daan set up that fund management platform. At that time, we only had 2 funds. And since then, we've grown it with a few more funds. But my role in the fund management team is largely now focused on the income funds and also on some of the regulatory side of the platform as well.
And I understand that earlier on you were more of a retail specialist, was that right?
Yeah, very early in my career, like 19 years ago, I guess, I started in retail shopping centers. I did move into logistics real estate specialty in 2008. So yeah, it's been quite a few years now in logistics real estate, specifically in Europe too. I've done quite a bit of European logistics, similar to Daan, on a pan-European basis.
And finally, coming to you, Brian.
Thanks. I've been working with GLP for over a decade now. I spent a lot of time with GLP in Brazil. I actually facilitated their entry into the market as an advisor. It was a large M&A transaction. It closed in 2012. During that time, I met and began to work with a man called Ralph Wessel, and I joined the asset and fund management team. And I've been doing this now ever since.
And you've only just made the move across to Europe, is that right?
Exactly. I've just landed in Europe. We arrived towards the end of November 2021. I'm very pleased to join Daan and Sylvia in the fund management team. Looking forward to working with them in Europe.
Okay, well, so you're all experts in fund management, but can you set the scene by telling us a bit about what's been happening to logistics recently?
Well, what we've seen in the last couple of years, I would say, this is not new. We've seen a fundamental shift from brick and mortar retail, as we refer to it, to online retail. This shift has been happening for the last couple of years. It's not new. But obviously, with the unprecedented environment around COVID, these trends have been accelerating. Everybody knows the Amazons of this world, and which is in fact one of our biggest tenants globally. And these type of customers have seen an increasingly need for space at a point in time where the availability of that space is scarce due to land constraints and environmental regulations in Europe. So we have seen a lot of tailwinds accelerating, driving demand for logistics space.
So that has put a lot of pressure on the one thing we've all been hearing about, which is supply chain management. Brian, perhaps you could tell us a bit about that and what's been happening.
Complementing what Dan said, what we have seen with this change in consumer behavior via the increase of e-commerce sales and people acquiring more products is an increased need for deliveries at homes on a speedier and more reliable manner. This was all accentuated by the global pandemic, which is in turn resulting in higher e-commerce penetration or e-commerce sales across the globe and naturally including Europe.
And have there been other factors leading to pressure on space?
There has been. In addition to the pandemic, there has been events such as the Suez Canal blockage and even Brexit, which has changed customs regulations and how operators in the UK will receive, store and ship products across the market.
All of that increasing the demand for that crucial commodity space. But what sectors are looking for more space?
It's not just your standard consumer goods. What we're seeing with e-commerce is that the end objective of our clients is that you can buy anything online. In addition to your standard products or consumer goods that you desire, you could do your weekly shopping online. So you could move towards grocery online shopping. You can move towards your standard goods you need to take care of your children or children's clothes. In addition, we've also seen the need for pharmaceutical storage growing. And more recently and topical, vaccine storage. With everything that's going on in the world today, there's an increased need to have cold storage and controlled storage spaces to attend to those clients' needs.
And controlled storage is about the entry and exit procedures into the warehouse.
Correct. A warehouse which would store a vaccine would be heavily regulated by vaccine authorities to monitor the temperatures, the quality control of the product inside the building.
So with this increased occupier demand and then the increased capital, how's that affected the business, particularly in 2021, working through these massive changes? Dan?
So I think what happened over this COVID period is a realization that the risk-adjusted basis for logistics is much lower. Where in a couple of years ago, logistics or industrial was seen as a more riskier asset class, that has definitely disappeared. With that, there's an appreciation for the asset class, which has resulted in a tremendous amount of capital coming into the sector. And this definitely had our effect over our business. In many ways, 2021 has been a record year for us. So, for example, the assets under management we have more than doubled from 3.2 billion to 8 billion today. Square footage under control and stabilized is more than tripled. The number of properties we have went from approximately 100 to 200. And in terms of investment activity, our investment committee approving over 3.1 billion of deals across Europe, with a further 1 billion in an exclusive pipeline under control. Fair to say that goes hand in hand with us hiring new people, and I feel quite proud on the business we have built, which is able to turn those stellar numbers of deployment alongside capital raising, which I think we touched on later.
So as I said, you have a three-pronged approach: invest, deliver and manage logistics assets. Let's move on to the fund management part of that, or the funds part, the investment side. Sylvia, what's been happening there?
Sure. I mentioned at the beginning that when Daan and I joined, we had two initial funds that were launched in 2017. And over the years, we've launched a few other funds. In 2020, we launched our second income fund. And that fund had a very active year. Daan mentioned the amount of capital deployment deals that we looked at. For that income fund, we did over $1 billion in acquisitions last year in 2021. And we've done almost about $500 million more in Q1 2022 already. So we've basically fully deployed that income fund about 2 years ahead of schedule. And what I think is quite interesting for that income fund is that at least 75 to 80% of those deals have all been sourced off market, which is quite an interesting statistic as well. For the other funds, our development fund, we did do an upsize on that fund in spring last year. And it's been quite active for the platform that we've done at least 500,000 square meters of development projects across the UK and continental Europe for those funds. And the other, I think, important thing to note is like during this period, the overall performance of the funds have been quite strong. It's been quite robust. We look at kind of key metrics like occupancy, rental growth. We also look at stuff like rental collection rates, which have been, around 99% quarter on quarter. So across the board, it's been strong performance and a lot of growth.
Just winding back a little bit, perhaps you could explain exactly the difference between the income funds and the development funds.
Yeah, sure. It's a difference of strategy for the fund. We tend to structure historically our funds into either an income fund strategy or a development fund strategy. The key difference being a development fund has the objective to go and source some land, develop a building on it, and then lease it up, whereas the income fund strategy is more actively looking for existing buildings with typically a lease in place, which drives then the income nature of the fund and the income strategy for rent collection and income growth. So it's just a difference in strategy between the two funds, whether there's land to develop or whether there's assets in place.
But in terms of an investor perspective, obviously with a development fund, you're waiting a little while the development is getting up to speed before that income will come in. Is that right?
Yeah, definitely. Definitely. There's a development timeline that goes with building out assets on these sites. And it's part of the risk profile of these funds. Development funds have some inherent risk that has to be mitigated and managed. And that is part of the fund strategy. And it's also part of the return profile that you expect to see from development vehicles versus income funds.
We're looking at that impressive deployment of the capital that you raised for the income fund. Brian, how do you think that was achieved? What was the GLP magic, if you like, that led to those figures?
I think that magic and the credit goes to the people on the ground, which have extensive experience in logistics in each submarket they operate in. So we operate across a number of countries across Europe, and each one of those regions has a country manager and an in-place country office and a supporting team that we have grown as we've deployed capital, acquiring new buildings and land and acquisitions across Europe. And we've expanded the teams. We have hired over 50 new colleagues, and I believe today we have 200 plus colleagues working across 15 different offices across 12 different countries. I think the relationships that these individual teams hold with their clients, with local developers, with local brokers, inside market knowledge that they intrinsically own after 20, 30-year careers in each respective market is driving this stellar performance across the portfolio.
Yes, Sylvia, you said that it was 75% of the deals were off-market?
Yeah, about 75% were sourced off-market by these local teams that Brian's mentioning.
With all of these deals happening in all of the countries, perhaps you could give me an example of a deal that you think best represents what GLP in Europe is trying to do. Dan?
I find it very difficult to pick out a single deal because every deal is special in its own way. I take most pride on the fact that we do have very good local people on the ground that have been able to establish reputation in their markets and forming relationships locally that has given us access and given us the position to execute on a large number of individual deals. I think we've been building this company on our reputation, where we deliver what we say we're going to deliver. And that reputation has allowed us to give a lot of people confidence when it comes to doing a transaction with us. And I think that is the key of our success in Europe. And internally, that culture has also been carried by the fact that everybody in this company is supposed to help each other. And as soon as you create that mindset of helping each other for a mutual goal, I think great things can be achieved. And I think that underpins our successful deployment rate to date.
Sylvia, is there anything that stands out in the deals that were made for you?
I'm a bit the same as Daan, like you're asking me to pick my favorite child. I did really like all of the Italian acquisitions that we did. In 2021, we did two large portfolios in Italy, one in the beginning of the year and one later in the tail end of the year. What I think is quite interesting, the way we approached that entry into the market, is we built up the team first, actually. We had an Italian team on the ground who were there for a period of time before we entered the market with assets. And I think that success really came through when we could source 2 sizable portfolios in a short amount of time and really establish a presence and be ready to go as an operator. That I think sometimes you see people go into markets and then back solve the people after the fact. I think that was a really great success for the Italian team. Another one that comes to mind for me is maybe there was a great one in Germany that we did where we saw a fantastic asset, great location, but not the strongest tenant credit profile. And there's a bit of a insolvency proceeding kind of looming on the horizon. And I think we underwrote it really well from the acquisition perspective. We had an asset plan in place. And when the tenant did go into insolvency, our local German asset management team, I think, did a fantastic job repositioning that asset. And when I look back on that one now, sometimes Daan and I can talk about that one because it's been one that worked out for over a period of time. That it was really great to see that you see what the plan was at underwriting, and then you saw the execution by the local team. And now when you look at the results, you're like, that really worked quite well on a coordinated basis. So that's one that quite stands out for me.
So some farsightedness there on that acquisition. Brian, anything that you want to add about this culture of the local teams on the ground?
I think it's been summed up well by the team. I think it's a culture of trust and support throughout the organisation. Each one of the countries know within their respective regions that they need to be able to recognise opportunities, develop relationships in their respective markets, and they know they will receive the support from the core teams to be able to execute and deploy capital behind their core strategies, and then also lever the global and pan-European customer relationships to occupy those assets and the expertise across the organisation to either improve or make these buildings more efficient. And I think it's a credit to the local teams on how they get these jobs done.
Yeah, you and Daan, you've been introducing some new customers in this last year as well.
So that's correct. So with every new acquisition we do or new development we do, we attract both existing customers for repeat business and new customers. And these new customers are active in the e-commerce space. These can be end users or third-party logistics providers that provide services for end users. I think the most interesting trend we have seen is that we have been able to leverage our Asian platform to attract new customers out of Asia, becoming active in Europe. What's interesting for us is that most of these customers don't need a single business and a single building. They were looking to expand and grow with our help in Europe, which I think is one of our key strengths, being able to utilize our global platform and global customer relationships to further grow our business elsewhere.
And some of those customers are already experts in logistics in their own territories.
Exactly. So we have examples of a customer that wants to start in the UK, which is an unfamiliar name in the UK, but in terms of where they're based, they're probably the second biggest player, which is probably bigger than what most players we have in Europe. So the growth potential of such a new market entry is incredible. And I would expect that we can help those customers of ours, both growing our business as well as theirs.
So looking ahead, what kind of strategies are you going to be deploying across Europe in the next year?
We will continue to build our logistic bases further through both development and acquisitions. I expect this build-out to be very focused within the countries we're active in today. As we mentioned previously, we have done quite some number of market entries in the last couple of years. And I think we've had a very solid basis in where we want to grow our existing platform. With our operating portfolio now being quite substantial, one of our key focus will need to be to manage this portfolio as efficiently as possible and create value for our investors within the holdings we already have. Adjacent to that, one of the key items we will need to focus on further is to improve the sustainability of our assets. So both the assets we will continue to build and the assets that we manage, as clearly this is a key priority should be for anybody in this world. This focus on sustainability should not only be on an asset level, but also on a broader strategic level. For example, we're now exploring setting up a solar business throughout Europe, which will utilize the roof space we have and therefore make a positive contribution to our ambition of becoming more and more sustainable.
Yeah, so obviously with those large buildings, the roof space is almost a valuable asset, really, isn't it? And you can start to generate electricity both for the building itself, which helps reduce the carbon emissions and the operating costs.
Exactly. And these are the simple things that can see as a win-win, because you utilize existing roof space, make the building more valuable by generating income out of that energy, and making the world a slightly better place by generating more green energy.
Looking ahead, what do you see happening in 2022, Sylvia?
I think the pace and growth of our business, we will continue just to see new fund initiatives. I think we'll be looking to add additional funds into the management platform. I think the sustainability side is a big part of our future in the funds as well, in terms of linking it into the performance of the asset, but also on the financing side.
What kind of fundraising are you actually doing at the moment then, Sylvia?
Well, we have a few things on the go. We are constantly expanding and growing the platform. There have been a few press articles noting that we're actively fundraising for our third income fund. We had our initial closing very recently, and we expect to have a first closing imminently. And I think it's an exciting time to grow another income fund and continue the success that we've had in the series of income funds that we've had in Europe. We're also, looking to continually do sustainability performance improvements within the assets, and not to forget the financing side of things in fund management. I think we're going to see a lot more sustainability-linked loans. We've done a few already, and I think we'll probably do more upcoming in the future as we continue to expand our capital base.
What is a sustainability-linked loan?
Typically, it's a loan that will have specific measures or metrics that you have to achieve from a sustainability perspective, and that will then impact what interest rate you pay on the loan. They can take on many different forms in the market, but simplistically, it's structured as either an incentive to hit certain ESG performance metrics, or alternatively, they can sometimes be structured to penalize you if you don't maintain a certain level of ESG standards.
Yes, we've talked before about the ESG reporting that you do across the portfolios, but also the impressive GRESB performance that you've managed. Is there any new information on that, or is it just carrying on with business as usual?
On the GRESB side, GLP has been reporting into GRESB since 2013, so quite a number of years. In Europe, we're quite pleased with our results in 2020. Our GRESB benchmark performance improved 13% versus the prior year. And we also received a couple Green Star awards. So it's, I think, a bit of business as usual, and also continue looking to improve our performance and the quality of the assets.
Brian, you've just recently returned to the team here in Europe. How do you see the logistics space changing in 2022, or how do you see it developing?
Thanks. I am truly excited to be part of the team again, and excited to be part of this expansion period for our business. I think the business fundamentally won't change too much. We'll see a lot of big box development, a growing focus on urban logistics, middle and last mile logistics, and a continuation of our acquisition and development strategies. What I do believe is that the technology inside the warehouse will continue to improve. This can improve materially from advanced automation, robotics, and more efficient operations inside the box. Although the warehouse may look the same from the outside, what's going on inside will be more efficient. And also from an environmental perspective, we will see additional uses of solar energy features on roofs, battery storage, and features for electric fleets, where our clients are migrating towards a more environmental friendly and reduced carbon output from their operations. But from a macro point of view, I think it's a continuation of our core plan, which is to have a leading pan-European logistic portfolio to serve our clients and to serve our partners as best as we can.
And what about the sort of land acquisition that goes with that? You mentioned right at the beginning, Dan, the pressure on land availability. How difficult is that going forward?
land acquisition is and has always been a more time-consuming process than opposed to buying a stabilized building. What you do see across the board is that land is just scarce, and it's becoming more and more scarce, which is resulting into either new locations being developed, which weren't logistics locations before. I see an increasing amount of redevelopments where older industrial, less functional estates are being transformed towards new logistics facilities. And unfortunately, it also means that land is becoming more expensive. Alongside that, especially in the more densely populated areas, a logistics building, a large logistics building, is not always the desired use from a local person. So you will see, and we have seen, more opposition of creating larger scale development sites.
How do you deal with that opposition? What's the strategy?
I think as soon as you start building into somebody's backyard, you need to have a very open dialogue with somebody and explain clearly what it is that you're doing, what your ambitions are, and take any concerns away. We try to build our buildings as carbon neutral as we can. In fact, in the UK, we've delivered our first carbon neutral building last year, which I think is a great result.
That's pretty much all we've got time for. Perhaps just a final word from all of you as to what's coming up. What are you getting most excited about? Just a quick answer. So I'll start with you, Sylvia.
I think the continued growth and the expansion of our business is the most exciting thing that I can think of on the horizon. And it's an exciting time. Brian's just joined us, and there's a lot to do. And it's going to be, I think, a great team working together.
And Brian, what are you looking forward to most?
Personally, when we're in these phases of growing our business, creating new funds, we generally attract a lot of new partners, new investors. To do this, you get to meet a lot of new people, create new relationships. And what I get a lot of job satisfaction from is gaining the trust of these new partners, investors, bringing them into our funds, and then being able to deliver positive results for our partners. And it's a lot of fun. It's really enjoyable. And that's what I'm looking forward to the most.
Excellent. And Dan?
So obviously the growth of our business is exciting in itself. I personally get a lot of fulfillment with not only that the business itself is growing, but also the persons we and I work with are growing as an individual and as a professional in a culture that allows people to excel. And I think seeing especially the younger colleagues evolving into senior professionals is something that gives me personally a lot of fulfillment.
Well, thank you very much to all of you for being here today. Thank you, Dan.
Thank you.
Thank you, Sylvia.
Thank you very much.
And thank you, Brian.
Thank you, Paul. It's been a pleasure.
Thank you for listening. My name is Paul Shearer. Thanks for listening to G-Talk Ask the Expert. Be sure to subscribe to future episodes wherever you download your podcasts from. And to find out more, visit the website at eu.glp.com.